Happy Monday, everybody. And a nice open. It doesn't seem bombastic, not a lot of enormous news, but 4-1 advancing the declining stocks. And now you have the S&P, mid-cap, small-cap, again, at record highs. And it's that same theme. When you get trade or reduction of trade tensions, very similar, very predictive things happen. First is the dollar tends to weaken. Put up the dollar here. You want to take a look at a perfect head and shoulders in the last month. That's a head and shoulders right there. That's 1 month on the dollar index, hit a 52-week high about a week and a half ago. And it's basically, with the exception of Thursday when there's some more trade tensions, been moving down. That has a predictable effect on a number of sectors here. If you look at the global markets, China tends to rise on positive trade days about 2%. That's exactly what happened again today. Germany and most of the rest of Europe tends to rise about 1%. And you tend to get 1 to 2% rises in all the big automotives. So you get Daimler and BMW and Volkswagen rising anywhere from 1 to 2%. And again, that's exactly what's going on. Here in the United States, you get a predictable series of reactions. Number one, Chinese internet stocks tend to rise about 2%. KWEB is a good example of ETF in that sector. Emerging markets generically tend to rise about 1%, whether you look at South Africa, whether you look at Brazil, or whether you look at the EEM, that's the second one there, which represents a lot of emerging market economies. That's again happening. Metals and mining stocks, aluminum, steel, copper stocks tend to rise about 1%. Again, same situation happening. And then you see healthcare doing well. Semis have also been rising independently, and that's another major factor in the rise that we've seen. Not a lot of breakouts. That's something interesting because we're still waiting for the 200, 250 new highs on the New York Stock Exchange or even on the S&P 500. Hasn't really happened. Some modest breakouts in techs with AMD, NVIDIA, Cisco, and Salesforce. We've got some railroads, Union Pacific, CSX that have been doing well for a long time. Some of the retailers, Costco, TJX, but not a lot of big breakouts. That's the sort of next leg I'm waiting for. The strength is in the rotation that we have been seeing. We've mentioned for a long time, low volatility names several weeks ago came to the fore when tech was weakening. So Lilly and Pfizer hit new highs. Procter & Gamble, Kimberly-Clark started behaving a little bit better overall. The whole consumer staple sector started doing a little bit better. And then at the same time, just in the last week or so, as we mentioned with the return of semiconductors, we've seen some of the big momentum names come back. So Cisco and Amazon and Netflix and Visa all have done a little bit better. You put this together, you get the rotation. And then a day like today, where generically we've got 4-1 advancing the declining stocks, and it's little wonder we're hitting new highs again. Guys, back to you.